project's identity.
Got it. Next one, Mont Kiara. This is by Bon Estates.
That's right, Bon Estates. And they seem to have a very clear focus for Mont Kiara. It's positioned squarely as large, family-oriented homes with a sort of Mediterranean resort vibe. They're deliberately targeting a specific lifestyle niche.
And they have some pretty unique features highlighted, right? Things you don't normally see.
They really do. It's explicitly designed to be pet-friendly, including a dedicated central pet park. That's incredibly rare, almost unheard of, in KL high-rises.
A dedicated pet park. Okay, that's a differentiator.
Huge one. And maybe even more remarkably, every single unit, standard, comes with its own EV charging isolator point.
Every unit. Wow, that's serious future-proofing.
Absolutely. These aren't just minor perks. They tap into very specific growing demands, pet ownership, EV adoption, and make the project stand out massively.
Unit sizes and pricing for Mont Kiara.
Only large units again, starting at a pretty generous 2,081 arreo feet, going up to over 3,000 square feet, clearly aimed at families needing room. Now, the initial launch prices were noted as being very competitive, like RM 580-620 PSF.
That is competitive for Mont Kiara.
Yeah, though current asking prices in the subsale or later phases are higher now, closer to RM 750-780 plus PSF. Completion is estimated for Q1 2027.
Investor perspective on Mont Kiara.
The pros are those highly specific, differentiated niches, large family units, genuinely pet-friendly, standard EV charging. This lets an investor target a high-value rental segment, especially expat families with pets who have extremely limited choices. Could lead to strong demand, maybe premium rent. The EV charging is great long-term thinking. And that initially low entry price offered significant upside potential for early birds.
Cons for the investor.
Bon Estates is maybe more of a boutique developer compared to giants like UEM or Pavilion. They've delivered good projects, but some very conservative investors might prefer a bigger name. The target market is intentionally narrow because of the large sizes and specific features. Also, its location is along Jalan Kiara 3, which can be busy.
And for a resident, particularly a family with, say, a dog,
this looks almost tailor-made. That pet park is a game changer. The layouts are really practical and spacious for family life. Things like en-suite bathrooms for every bedroom, the focus on greenery, extensive facilities, the Green RE Gold certification. It all adds up to potentially great family environment. Plus practical touches like a resident shuttle service.
Downside for residents.
Oh, it's obviously not for you if you don't need that much space or don't fit the family pet profile.
Yeah.
And managing such extensive facilities will be a test for the developer at this scale compared to their previous smaller projects.
Okay, last one on the list, Kiramas deDaun by Asia Quest Group. What's their approach?
Asia Quest is a name synonymous with Mont Kiara. They have this long-standing Kiramas series, a very trusted brand within the area itself. Their concept for deDaun is a natural homecoming, focusing on nature, tranquility.
And they have one absolutely standout feature, don't they?
It's pretty spectacular.
Yeah.
The centerpiece is this incredible 760-foot-long interconnected pool and stream system that literally winds around the towers.
To 460 feet, like a river pool.
Basically, yeah. It's designed as this amazing resort-like water landscape. It's a huge wow factor, really using the natural slope of the land.
What's the unit mix and pricing like at deDaun?
They offer a really broad range, actually. From 1,313 SKUIT two-bedroom units up to huge 4,600-plus SKUIF duplex penthouses. So catering to many different buyer types. Indicative PSF is around RM 845 to RM 920. This means two beds start around RM 1.1 million, and those big duplexes go well over RM 4 million.
Investor view on Kiaramas deDaun.
Pros. That established Kiaramas brand name carries a lot of weight and trust in Mont Kiara, which helps with resale and rentability. That incredible pool is a massive, highly marketable feature. You can imagine it appealing strongly to premium tenants and justifying higher rents. Plus, strong initial sales. The first phase was reportedly 95% sold. That significantly reduces investment risk.
Cons. Seems like a winner.
The main one is the timeline. Estimated completion is quite far out, SEP 2028, or even May 2029 for later phases. That's a long wait for rental income to start and more exposure to market fluctuations. It's also a big project overall, 661 units, which could mean a lot of units hitting the rental market around the same time initially. And the phased construction means early residents will live with ongoing building work nearby for a while.
And living there as a resident.
You get that truly spectacular pool landscape, plus loads of other facilities, tennis courts, sky lounges. It's designed as a complete lifestyle hub. The nature concept aims for a sanctuary feel. And Asia Quest generally has a good reputation for managing their Kiramas properties, which gives confidence for the long term.
Downsides for residents.
Primarily the long wait to actually move in. And with over 600 units, you might find popular facilities get crowded at peak times. Its location near the Sprint Highway is good for access, but might mean some traffic noise for units facing that way.
Okay, wow, that's a detailed look at each. When you lay them all out like that, you really see how strategically different they are. Each one is trying to carve out its own specific niche in this crowded market.
Exactly. If you picture that comparison table from the sources, you see it clearly. Developer strength, completion date, the core concept or big idea, the unit size strategy, the price point, they're all different moves trying to capture a specific segment.
Which helps clarify things for different types of buyers, right? The sources made some recommendations based on buyer profiles.
Yes. So if you're purely an investor, looking mainly at yield and appreciation potential, the MINH and Pavilion Mont Kiara look compelling. Why? Because of the strong USPs, the brand safety in Pavilion's case, and that proven initial demand, especially for the MINH. Olivia is also interesting for investors simply because it finishes sooner, meaning quicker potential returns.
Okay. And what if I'm a family looking for a place to actually live long term?
Mont Kiara really stands out, particularly if you have pets, because it's so specifically designed for that. Large, practical units, too. Kiramas deDaun is a very strong contender as well, with those amazing facilities and the trusted Kiramas legacy, but you just have to factor in that longer wait time.
What about buyers whose absolute top priority is privacy, maybe high net worth individuals?
There, Olivia seems pretty hard to beat. That 4 units per floor, private lifts for everyone, that's maximum privacy in a condo setting. The MINH also scores highly on privacy because of its low density and exclusive hilltop location.
And finally, what about someone who's maybe upgrading, looking for value, but still wants that Mont Kiara lifestyle?
Boniara and Kiramas deDaun, especially looking at their initial launch pricing, offered some of the best value in terms of PSF for the large size and lifestyle provided. Relative bargains compared to the higher brand premiums elsewhere.
Right. So, pulling this all together, it feels like Mont Kiara is entering a new chapter, doesn't it? A maturing phase.
I think that's exactly right. This analysis really confirms a shift. Developers aren't just churning out generic luxury anymore. They have to offer something specific, differentiated, sometimes even niche.
Like Olivia selling extreme privacy.
Pavilion selling brand access and services.
The MINH selling theme and views.
Mont Kiara selling that family Pete EV lifestyle.
And Kiramas selling nature connection and legacy.
Exactly. Having that clear, defensible USP isn't just nice to have anymore. It feels like it's become essential for survival in this competitive space.
And the collective impact of all these new projects, that's the next big thing to consider.
Absolutely. Just these 5 developments we discussed. That's roughly 2,000 high-end units coming onto the market between 2025 and 2029.
That scale has to increase competition, right? For rentals, for resales.
It inevitably will. It'll likely put more pressure on rental yields, make the subsale market even more competitive for existing owners. And, of course, it will add more strain to the roads. The traffic situation isn't likely to improve without major infrastructure changes.
The MRT3 Circle Line gets mentioned sometimes.
Any hope there?
It's mentioned as a potential long-term positive. If it includes convenient stops for Mont Kiara, it could eventually ease traffic and maybe boost values. But the sources stress it's still distant, unconfirmed. Not something to bank on in the near term.
Okay, so let's try and wrap this up. What's the final verdict from the sources on Mont Kiara today? Secure, but complex.
That sums it up pretty well. Mont Kiara's fundamental strengths, the schools, the amenities, the prestige, that whole ecosystem, keep its position secure as a premier address. But the investment side, especially banking on capital appreciation, it's much trickier, much more nuanced than it used to be, say, 5 or 10 years ago.
The days of just buying anything there and expecting it to fly seem over.
That seems to be the consensus. The era of easy, market-wide appreciation is likely past.
So the absolute key takeaway for anyone listening is success, whether you're investing or buying a home, now really depends almost entirely on astute selection. Choosing the right project. One with a clear, strong USP that genuinely matches your financial goals or your specific lifestyle needs.
And given how competitive it is and how project-specific success seems to be,
deep, thorough due diligence on the individual projects themselves isn't just recommended anymore. It's absolutely essential. You really have to do your homework.